Okay, good afternoon, traders, and welcome to the Bookmap Academy 2023 recap. If you guys aren't familiar with the Bookmap Academy, we'll get into a little more information in just a second. But okay, good. The goal here is to give some mentoring and coaching for you guys to journalize your trades, learn about journalizing your trades, and to hone and focus your skills to become better traders. And along the way, you'll be journalizing your trades and creating some content, which is great for you and also for us. And we are willing to give you Bookmap for free if you can meet a certain threshold and a quota. More about that in just a minute. So anyway, happy holidays, happy New Year's, everybody. This is the last event for the year. We have a lot of interesting stuff coming in 2024. Let's go through it. So first off, I want to start off. Yes.
Can you launch your stream so we can see it in Discord?
Right.
YouTube's great.
Okay. Okay.
Checks 5.
Okay, can you guys see? Okay, great. Okay, so the first thing we want to start off with is you guys may have seen this at bookmap.com. We're offering a sale here end of the year. And so it's a pretty good deal. So we had a couple, we had a Black Friday sale for Thanksgiving, and it was just for a month or for 3 months. I want to tell you about this deal here. You can get 30% off an annual subscription. So we'll click here, we'll go to the details. It is, well, it started the 26th, it runs to the 3rd. Okay, so you may have heard of this deal here. You will be prorated your 3 months if you got the 3-month package just last month. Okay, so 2 months of those will be prorated. So you get an additional discount, right, from those extra couple of months. All right, so anyway, we wanted to offer this yearly deal here so that it coincides with the new year. And what we've got for you is a pretty nice deal for Bookmap Academy members and anyone who signs up during this period. Okay, so it's pretty simple. It's pretty straightforward. Let me explain. So if you have New Year's resolutions, most of us do. Okay, you want to become a profitable trader in 2024. You want to meet a specific profit threshold or goal. All right. So why not do this? Get Bookmap, get the annual deal, get the 30% off. You'll be set for the year. Join the Bookmap Junior Academy. Okay, current members can also get this deal, and or applicants as well. And then you'll be getting the training and coaching during these sessions from our coaches and seasoned traders. Then you'll be building your journal and working on your strategies, honing your skills so that you can become profitable and meet your goals in 2024. So the deal is this for Bookmap Academy members or Junior Academy members and applicants. If you, why not get the deal? You've got a year to and it's all paid for. At least your Bookmap is paid for the year. However, the deal here in the Bookmap Academy is if you meet a certain threshold of quantitative and qualitative data or content in your journaling, then you can get Bookmap for free. Let's suppose within, let's just use an example of 6 months. You graduate to the Bookmap Academy and you get Bookmap for free. I will come back and I will prorate the rest of your subscription that remains on your annual sale, okay, on your annual deal. And then what we'll do is the remainder of that annual subscription will be used for any Bookmap add-ons that you want. Okay, Bookmap add-ons, we've created the MBO bundle comes to mind. There's many more that we have. All right, so it's up to you, whatever you want to use, but that would be the deal. So it's really pretty much a win-win if you want to set these goals for yourself for the year. Get the deal. You'll get paid back if you make it through the academy. All right, so I have the link here for you. I'll put it into the chat so that just click on that and go through the process here. Okay, so hold on just a minute and I'll put it into the chat for you. Okay. Oh, it looks like Dan has already done it for me. Okay, thanks, Dan. Excellent. All right. So anyway, that's the deal. Yeah, we just went through the whole thing. Now, just to go over a little bit of the Academy in 2023, what we did. Okay. Well, first off, you guys, one of the deals that you get as Bookmap Academy members was you got free access to some of these tools. These are in beta, and we'll give them out to you as part of the program. And this is for all levels, an applicant all the way up to a streamer. We had many algos for the Market Pulse tool. You guys had free access to that. The Trader Map Pro tool, you had free access to this as well. And I have an example from Slowdown on this. And then the checklist, setups checklist, was exclusive to the Academy, going over, like, for example, a flag pattern. You guys had access to that as well, which is great. Happy to do it. And then welcomed new members. We have 100 plus in the Academy now to date. Okay, so this is great news, and that's just, we really haven't put too much effort into this yet. We have a lot more to go. So 2024 should be a pretty big year for this Academy. And then Blue Jacket winners, if you are in this Blue Jacket competition, it's a separate program in Bookmap. But winners are invited to the Bookmap Junior Academy automatically. Okay, so Shark Blue and Crash F16 were invited, then we had over 50 trade reviews in December alone. Okay, going through your content in here, the coaches and the feedback to your content. This is unique. I don't know too many other programs that offer this. We're happy to do it. Happy to provide this community for you. We hope you get something out of it. Not only through your journaling, but then also the feedback. And we had 6 Academy review meetings here. This is the 6th one. We plan to do it. We're going to try it weekly, every week, Thursdays at market close. So that's the goal, at least, for the upcoming year. Yeah, and we also had a Pro Trader webinar with Crash F16 going through how he uses the Market Pulse tool that he had free access to due to this program. All right, so that's kind of a year in review. Want to highlight some members in here. So congratulations to Crash F16. He made it into the Bookmap Academy. And then let me show you guys a little bit about what is required in here to make it to the Academy. All right, so now he's been, making quite a bit of content, and a very high-end content marked up, and he's gotten a lot out of it. So if we take a look here at his spreadsheet here, okay, let me just show you. So when you come into the program, you get a spreadsheet. Okay, you request it in the Bookmap applicants chat room, and then look at all the content that he's created in here. Okay, so quite a few pieces in here. 40 pieces of content. There were 40 trading days in December, so that's 2 per day. And he's got his notes in here and everything. This is what is required to make it to Bookmap Academy and get Bookmap for free. But guess what? He has doubled his content in here. It's not 1 per day, it is 2 per day. He will get also not only Global Plus free for January, he will also get the MBO bundle free for January, okay, because he's doubled his quota. I just want to show you guys what's required in here, okay? Now, he has fast-tracked through this program. He has learned quite a bit in a very, very short time, and you guys probably know from his content. And it is rare for someone to go from the first month of Bookmap Junior Academy into the Bookmap Academy. Okay, so yeah, congratulations to Crash. Really, really good job. And Crash, we'll turn on the mic for you in a few minutes here when we start to go through your content. I want to go through a couple pieces. I also want to shout out here amazing progress. Rob Davis, Stephen, Alan, CMJ, really, really great stuff. You guys have progressed immensely. I'm looking at some of your content. I don't have a before and after though, but especially Stephen. Well, also you, Rob, as well. Pretty amazing to see what you were doing before some of these Bookmap Academy meetings and what you're doing now. So I'm really happy that it seems to be helping, and we think that's a great program for you. Also want to continue on here. Great progression here, but keep going. Okay, a lot of you guys are really doing well here. DNT Matter. I don't know if he's in here or not. He's on the cusp of becoming Bookmap Academy. He's just not making the quota. You've got to make the quota. He's focused his content. It's looking really good. He's also made incredible progress here. JZ is also doing really well. CMJ, Rubicon Trader, and Dark Trader BR Brazil. You guys have made some great progress, but you just kind of fell off a little bit. Keep going. Get good at your journalizing, and all we can say is, like, if you can make it through there, through that Bookmap Junior Academy, then you can qualify it and get Bookmap for free. Also want to reach out to Adrian Payne, Trading on Fern, General Iro, and John Robbs in here. These are new newbies to the program in here. They're doing great. They haven't done much though yet. Adrian, you were doing just great, and then you just kind of fell off. I know it's the holidays and everything, but keep going. And this spreadsheet from Crash is the model. Okay, just really, really good stuff in here. It doesn't have to be even as detailed as this. Okay, we're not even requesting this. We're just looking for the date, the platform, and the link. It could take you 10 seconds to fill that in every day, okay, after you create your content. Anyway, great job, guys. Keep it going, and you'll progress here. Also, Bookmap Academy resolutions for 24 from our side. We want to keep you guys on the right path. I wanted to highlight this in here from Slowdown, something he put together a while back, and it shows his progress in here. He started to mark up his charts in May of 2023, and just started to, you can see it's scattered, it's all over, but he's identifying order flow elements in here. Okay, then in July in here you can see another screenshot. Look at how focused he's becoming. Okay, much more focused, and looking for very specific things that resonate with him and his style of trading. Okay, and then example number 3 in here, in October 2023, you guys are probably very familiar with his Wyckoff Spring continuation setup in here, or markup markdown. After was a consolidation, and looking for this kind of test below a range, and then looking for those buyers to come in here. He's got it's just beautiful content. He's got an image here. He knows exactly what he's looking for, and then you can see his actions match exactly what he's looking for. This is the progression he took. It's a model here. for you guys. Stay on the path, keep going, you'll get there. All right, it takes a little while, but stop, the hype and the trading and the emotions of trading, and worry about knowing what you're looking for. We're going to continue on here with our Bookmap Academy resolutions for 2024. Weekly meetings, more coaching and mentoring. The Learning Center, you guys are probably now well familiar with the Learning Center in Bookmap. If you're not, just go to education here, and this will take you right to the Learning Center from bookmap.com. We're going to build this out more. We're going to have more courses in here. We only have one strategy in here right now, a continuation pattern and a flag. We'll have a reversal. We'll have some sideways strategies, some other things to look for inside the Learning Center, and other courses on trade management. Okay, we look forward to doing this in 2024. This will be really great and should provide a foundation for you. Okay, a lot of trading, also trade management. We're going to be covering that within Bookmap, and then enhanced journaling tools. Okay, this is in progress in here. So we'll let you know more about this in the future as well as competitions. Okay, we're also going to have some Bookmap competitions. Not sure when exactly, or not sure what the theme might be. Actually, it might be on a setup. It might be on a certain market, a certain instrument, but we have that capability as well. So a lot of tools here for 2024. All right, so let's jump in now and start to go through some of the content. Jack, why don't you jump in and tell us what you see here from Donkey Face.
So good afternoon, guys. It's nice to be here again. I'm really glad that we're going to be doing a little bit more meetings coming into the next year. I think it's going to be really great, especially with the number of people we continuously get. One of the things I want to highlight is Donkey Face. Donkey Face made his first submission earlier this week. Now, what's great about this is if you just look at the order flow itself, you really can't tell at a glance what the time slices are necessarily. But if you look down at the horizontal time slices, you'll notice that he's looking at the market in second. Now, if you get used to Bookmap, you can probably tell that this is a shorter duration time frame just because of the volume of the trades. There's a little bit of a horizontal openness there, so you'll get kind of used to that. But looking at it, you can really not tell that necessarily. What this shows is how valuable Bookmap can be on a fractal level. You can really see how order flow phenomena exist throughout the market as a whole, whether you're looking at 5 minutes or 30 minutes. These similar patterns exist, whether it's exhaustion or absorption, all of those things. And that's really one of the main things that I wanted to hit here. Also, before we get kind of deep into this image, there's one thing missing from this image right off the bat. And it was crystal clear to me when I first looked at it, and then I pointed it out, and even Donkey Face realized it when he cropped it. He doesn't have his price axis here. So we don't know exactly what price it is necessarily. Now, he did include some notes, but make sure when you're doing these things, like, you don't miss those little details, right? Aside from that, there's a ton of really good little details in here. Because remember, this is about not just documenting your trades for Bookmap, but attaching this process to journaling in general. Journaling is going to allow you to incrementally test yourself, see how this setup worked before. Maybe you recognize something in 3 months from now from this setup, and you can go back and see if it was still there. All of these things are very, very important. So putting details into your images is really useful. He has the date, number 1 up here. You can see that. You don't necessarily need to do that. A lot of times when you save an image, you'll get that file date. But what he does have here is he's got the title of his trade, essentially. It's his first spreadsheet trade. And then he's also got that he's looking at a short bear flag, and he's got a very iconic name to himself, big dot to big dot, and he's looking for a scalp. These are really good, important details right off the bat, so that, like, when you're coming in to see this image, if you're another user or if you're coming back and you hadn't seen this for 6-9 months, you know immediately what you're looking at. Okay, I'm looking for the bear flag. I'm looking to go dot to dot and set up. And that's exactly what he's got set up here. Now with this, a couple of other really key is you can see his entry and his exit. We got a question in here in the chat here just a minute ago. I don't necessarily trade on Bookmap. How do I document them? Well, this is how you can do that. You can just put little annotations where your entry is, where your exit is, what you were looking for at those locations. There's going to be a little bit of slippage. Maybe it's a tick off, maybe it's a tick on either side. It doesn't necessarily matter. You don't have to be super precise about it, but just give yourself, this is where I was looking to enter, this is where I was looking to exit, and provide that context. And you can see that at number 2, and you can see his target there at number 3. Now, he mentioned that this was just a scalp trade, and he mentioned also that it was that big dot trade, and you can see that he calls that out at number 4 down here, or at the top there. And he's looking for that strength, that big dot, that big volume to come in. And this is very common type of strategy where you're looking for volume to enter the market, and you want to be with that volume. So he's looking short. If he gets the volume that he gets, he does get that at 4, and he's looking for some continuation from there. He gets the flare. He gets the bear flag pattern at 5, which is essentially somewhat like a wedge, a lot of people might call it. So he's looking for that kind of pullback, a little bit of consolidation, and then he's looking to take the break off of that. Now, what's great about this is at 6, from 5 to 6, you can also see that he's looking at what's called a measured move here. Now, you can tell that the measured move from 5 to 6 is essentially about the same size as the consolidation from above 5 to 5. And that's something that you can see in a lot of different markets. And that gives you an idea of where to target something. So if it moved, from A to B, you expect to move similar in magnitude from B to C. And he's notating that. So you can see that really clearly in what he's looking for here and what he wants. And he's got his point right at that nice clear liquidity. Now, what's also great about this is because he was just going for a scalp, he just got in the trade and got out of the trade, right? And there's nothing wrong with that. I made 3 of those trades earlier today. I was in and I was out. That's it. But what also is good here is he's reflecting on his trade while he's writing down his image. And you can see that at 7. 7 is where he's notating, this is where I would have liked to have gotten out of the trade. This is where, if I was running this strategy from end to end, that's where I would have done it. And that's really what he's calling out here on this particular part of the image. And that's important when you're journaling. Where did I go wrong? Where did something happen? Where were my trailing stops at? Did I get stopped out? Those can be very, very important context that you're not going to have when you go back and review these images weeks or months from now. And then at 8, you can really see he's looking at a couple of other things. Very nice detail image, or nice details to the image as a whole. He's looking at CVD, he's looking at price change, and he's looking at delta percent. These are all part of the Market Pulse add-on. He's looking at that volume pressure imbalance, which can leave him with that kind of bullish extreme or bearish bias, and he's looking for those confluences. And you can see that the black line there is actually his Market Pulse, and you can see that he does get a volume pressure imbalance on that push lower after that consolidation. Yeah, right in there. You can see that you get it right with that flag pattern, and you get that continuation down.
Yeah.
Go ahead.
It's a great image.
Yeah.
Are you finished, or did you have anything else that you wanted to cover, Jack?
The last thing I was going to say is it's great that you have these contextual clues in there, because when you come back days, weeks, months from now, you're not going to remember what the market was doing exactly. But with this amount of information, with this kind of stuff all set up right there, you know what's going on in the trade. Don't trust yourself to remember it all. When you look at an image, put it down, write it down. And this is a great example of it. This is the first entry by Donkey Face, by the way. So set the bar high for himself. I'm going to hold that bar high to him. So really great job. I really like this image right off the bat. So this is the one I chose to do. Usually we get assigned kind of a couple. I reached out and I wanted to do this one because it was such a good image. But yeah, go ahead, Bruce.
Yeah, no, I'd like to turn it over if Donkey Face is in here.
I looked and I didn't see him. It's that holiday week. So.
Yeah. Understood.
But I'm going to reach out to him specifically as well to let them know. That way you can come back and view
Yeah.
the YouTube.
I would just, I mean, I do have some comments on this here as well. I mean, for all the reasons that you had mentioned,
Yeah.
I really like. First off, he knows what he's looking for. So he has studied something, right? So
Yes.
it precludes this image. He knows what he's looking for, right? So he's looking for this kind of volume step in. He's looking for this kind of flag or continuation pattern. He knows what it looks like, and he's also outlining where it might go. He's looking at measured moves in here, and this is like usually. So in my mind, I mean, he's probably been trading for quite a while. He knows exactly.
He has some experience, from
Yeah.
what I heard from him.
Yeah.
One of the questions I would have for him in general, and I would have this question for anybody else, while he did look for the measured move, a lot of people don't necessarily associate the liquidity directly as a target there. So you see that target. Was he conscious of that while he was looking for the measured move? Because sometimes that liquidity might be a little higher or a little lower, and you can front run it a little bit, right? So kind of just keeping that in the forefront of his mind would be something that I would have to him had I actually a chance to ask him questions and stuff.
Yeah.
But it's great, like you said.
Yeah, and I there's another comment in here. This is something that really resonated with me from Slowdown. He said, like, one of the things that he was looking for and doing when he was going through his process, and he still does it, is refining. And look at the graphics in here. Look how, I mean, okay, it looks pretty, but like he knows what he's looking for. And he's like crafted this. It's not all over the place. It's not just kind of thrown up. He knows, where it's going to go, and then he starts to mark this up. This kind of clarity will help, your journaling, and the more time you start to spend with these types of things, doing this process, the more you're going to learn. There's things in there that you don't see if you don't journal. Once you start to go through, you think, oh, look at that. That's pretty interesting. Maybe it's something like you didn't understand. Here's a dumb example, but like look at the exhaustion here.
Mm-hmm.
I mean, you start to notice some of these things in here. And it's like, wow, and it's not a data loss because I know that I can see the liquidity down here. Changing. So, this is, you notice some of these things that can lead into further studies or, furthering your own setup and making it better, or your trade management at that point. Maybe you've taken some off down in some of these areas in here after one, a smaller measured move or something. You can get back in here. And then look for another one down into this area here. So just focusing on good solid documentation in here should help your process and make better trades. So that's from Slowdown, and I believe in it as well.
It's absolutely great. Yeah, the refinement process is like one of the most important parts, and that's why you need to go back and journal so much, right?
Yeah.
It's because you're just gonna get better at this. The more time you spend doing this stuff, the more you're gonna get comfortable with understanding, okay, I have a $200 drawdown right now, but I'm still confident in my trade. You're going to be more confident with getting into and out of a trade. You're going to be more confident as you explore other markets, or maybe you'll want to hedge a trade. And as you just kind of build this experience up, reflecting on it and refining those processes is going to help a lot. I have an image I'll link in the chat while you're going over the next ones, kind of going over some of that same stuff. Refining a trade, I've adjusted, and I can kind of have a good idea of where I'm going to, move my stop or move my target price. There was one today that actually just kind of, when you mentioned it, it stood out to me. But this was a great image. Like I said, I saw it and immediately wanted to cover it. It was the first image we've seen of Donkey, so I'm excited. I hope he's able to continue. This is great quality. This is the bar, and we still make mistakes too, cropping out the price line. So I've made them. I've cropped out the timelines before, so I couldn't tell what time it was, and I had to go back, and it's just a mess. So we all do it, but it was great. Yeah. So
Yeah.
that's it. All I had for Donkey.
All right, excellent. I mean, look, that comment I just made, like, here's an example. Like you said that he wanted to get out here, right?
Yeah.
In this area here. Well, you start to notice these things. Okay, so this is your target, and they're pulling liquidity in here along the way in here. And then look at this, you know? And then look how that actually came in just before the push through. So,
Yep.
you can start to notice these things in here. And, now this is the NQ, but, maybe for the NQ, you start to really reflect off of some of these things in here. And this happens via the documentation. That's my main point.
Absolutely. Kind of similar to that, I linked an image in the Academy streamer chat here that goes hand in hand with this. This was during AMD. If people want to see that, I'll link it in the YouTube as well.
Here, I got it here.
Okay. You might have to zoom out a little bit. I got some resolution there.
I don't know if I can.
Just do Chrome zoom. So like shift and scroll down. Or control, one of the two. But
it's positive, negative, right? That's what it is.
Yeah.
Okay.
So you can see the box above before, and if you want to go look in the stocks chat, that was where my secondary target was. I knew that if we broke through 150, we get a strong push, a little bit of continuation, and those liquidity bands directly underneath my upper box there are areas where I kind of know that like that's likely going to be where we're going to target. We're probably going to break through that a little bit. So that's where I'm going to put my secondary profit target. And then I highlighted this because sure enough, 20 minutes later, once we finally broke through that upper edge of liquidity, we get that strong move all the way through and we land right in my box for my secondary target. And then if you, in that same trade, I have my stop and I place my stop basically right before price comes all the way back down and then goes right back up a little bit. And my stop was nice and safe at a trailing stop. And that's in the stocks channel if you guys want to look at that. But by journaling and refining your process, you're going to make improvements like that. You're going to have slightly different expectations. That's not huge, but that's 30 cents per share. So it adds up. They're pennies, but pennies add up. So refining and going through your process and journaling will really improve things overall. And this is a great example. Donkey had a great example. Bruce is spot on with that.
Yeah, this is great. Thanks, Jack. I really like it because like this is something that you just can't get from, and this kind of understanding. Well, I mean, you've been using Bookmap for a while. That's why you're a coach. But like understanding liquidity. And this context between liquidity and the aggressors. So once you start to understand that, then you can start to manage your trades around that. And this is a great example. So
if anybody wants to see that
simple
particular trade, it's in the stocks channel. Go there. If you have any questions, just ask them in the Bookmap Academy channel. We can always go over it. But yeah, I appreciate it. That was it I had for Donkey. Who do we have next?
Okay. So
I don't see him. Yeah, he's still not here. So
yeah, hold on a minute here, and I will bring it up. Okay. So Rob. All right. So I've got actually Rob's. Rob did it, and we'll turn the mic on for you in a minute, Rob. But Rob's been doing this. Now, we don't have time to go through and give you guys feedback on, this is 18 minutes long, 19 minutes long, basically. And he's talking through his trading. And this helps him. This is his style, right? Now, he's also made lots of images and et cetera. Slowdown last time had some feedback. Well, you're kind of rambling in some of these and trying to go through them. Rob, as I went through your video in here, it like warmed my heart. Like You were looking for a flag pattern in here, and you're just talking your way through it, and you're looking at this part in here. I forget what minute it was, or 7:54 in here, and you're like, I'm just not seeing anything. And I remember this day too. I was looking for it as well, and it's like I'm just not seeing anything. It's nothing's really happening in here. This is an equal move up and almost an equal move down. Like I'm not getting it. And then even potentially a flag pattern here, like strong move, pull back, strong move. But look at the volume on this, and you knew it, right? It's like this is not what you're looking for, but that's golden. You stay away from it. Like you're looking now, you're starting to focus. You're going through that process like of slowdown from part one of identifying order flow to part two being more focused. And this is great. This is progress. Is fantastic. So kudos to you on that. You continued to look, and you were getting frustrated because it wasn't presenting. Several minutes later, you're looking at another one in here, or maybe this was earlier. I can't recall. Hold on. Okay, so yeah, this was pre-market here, and you were looking for it in here, and it's just like, no, it's just not it. That's not what I'm looking for. It kept you away from trading, and you're like that hunter, like camouflaged on the hill, whatever it is, to take your one shot. Okay, a focused trade. You know what you're looking for, and this is really great stuff, Rob. So I don't really have too much more for you than that, but I wanted to recognize that and go through it here with you. It's very good stuff. So let's turn the mic on for you, Rob. You're in here, right?
Yeah.
There you are. So why don't you walk us through
the input on that?
Yeah, why don't you walk us through?
Well, yesterday was kind of difficult for me to come up with anything because it was a mean reversion day, and today was even more of a mean reversion day. We were stuck right within a pretty small range today.
Yeah,
so,
yeah. Well,
so those continuation moves, when I have the context of a mean reversion, what do you think I can have like a flag pattern or continuation move in a mean reversion day, or is that just that's not the right scenario
it's not.
be trying to do it?
It's not. Now, on a smaller time frame, it could be. So, like if the markets are fractal. So if you are looking within like a small little range, like somewhere up in here, just for example, like up in here someplace, you get that move away, you get your pullback, and you get your second leg, right? So maybe something like that. But you kept on kind of squinting and looking for it, like you were saying, like this might be it. Yeah, it kind of is. It kind of isn't though. But you can see that here's your consolidation range here, right? Now this pattern in here is not good though. Look at how the volume wanes, and you have high liquidity in here. Okay, it finally did go through it. It never reached up here though, and I would be looking for it to do that, and it didn't. So that's a long answer to your short question of yes, you can look for it, but you'd have to look for it on a different time frame.
Yeah, and for me, it's I'm trying to get the idea of what is the bigger context for the day. Is it going up or down or sideways? And we get to a sideways day like yesterday and today, then I figure, oh, I need some other kind of setup besides a continuation setup.
We're working on it, Rob. We'll get there.
Yeah, I'm just working on the 1% particular thing right now. So
Yeah.
if I cast out in too many different directions, I'm not going to be able to get anywhere with it. So I've just been focusing the last few months, I guess, on that flag pattern or continuation pattern.
Yeah. Yeah. No, it's great, Rob. And I hope, I mean, that's just, I don't know, trying to think of an analogy that makes it maybe a little bit more helpful. It's like you're fishing or you're hunting. You don't get a kill every day. You don't get a fish every day. Uh, sometimes you go out there and you do everything right and you get nothing. So, and this is why a lot of traders during the holidays, they don't even, it's not worth their effort. They would rather, take the day off, the week off, refresh, and then be ready in mid-January to hit it hard. Yeah, there's certain seasons, to the market in essence. So that's something to consider as well.
Yeah, and I just figured, right at the end of the year like this, a lot of people are still on vacation anyway.
Yeah.
So, it just seems like the market's not done much of anything since Christmas.
Yeah. Okay. So anything else, Rob? Then we'll move on to the next one.
Uh, I think that's about it for now. I'm just going to keep working on it.
Excellent. Excellent. Okay. Um, well, like I said, Rob, great, progress. And I really liked it that you were noticing like it's not doing what I want. That's when you can notice that, like what you're looking for. Now, this is interesting in here. So this is same day, and this is crash. Okay, and and he says Bookmap doesn't get any better than this, right? So this fit his criteria, and so now so I wanted to reflect off of this, and Rob, we'll open the mic also for Crash, and let him say some stuff in here, but um, I've heard this from a professional bank trader that was coaching me, and he was saying like on the trading floor, or where they were on their floor in the bank, um, you know like his team, and they'd be doing great, and everyone's making money, and then like they'd reach over to, or talk to other guys, and they'd say, oh, it's just horrible market, like, and he's like, well, how can he not be making money in this market? That was his answer or question. And then the opposite would happen. So they would be he would be having just a horrible, like few weeks or month or whatever, and then these other guys would be doing great, and it's like, how are you making money in that market? So let's turn it over to Crash, and he'll go through a couple of points in his setup here.
Hey, good afternoon, everybody.
All
Hope
right.
everybody had a great Christmas and ready for a good New Year's. Thanks for the opportunity to work with you guys and making it to Bookmap Academy. I certainly appreciate the vote of confidence and all the coaching that went into this. So thank you, Bruce and team.
Yeah, you earned it, man. I mean, it's as simple as that. Thanks go to you.
Yeah, great. So you want me to talk about the slide right here specifically?
Yeah. I mean, because like there's a follow up to it, is this one here. But why don't you walk us through? I mean, because I wanted to reflect off of Rob not seeing anything, and then to you seeing something.
Yeah. Well, so the first thing that I think sticks out to me is that we're both using a little bit of different information. So I think if you just look at my chart and then look at his chart, he has a few less, indicators that are enabled on his chart. So I guess the first thing I would say is, ask yourself a couple of questions when you're making your charts, and that is, do you have enough information that gives you the big picture? And the thing that Bookmap offers is it has so many different add-ons. Whether you're talking about sweeps, absorption, stops, icebergs, etc., market pulse. So maybe I would say if you're not using some of that stuff, to maybe make one chart with it and just start. And if you have multiple charts, I don't know how many charts everybody generally has with Bookmap, but have a couple different charts and start gauging your eyes to what the different data points that you can add on to the chart, because it really makes a big difference. And I would also say is use different time frames to look. So, if you looked at yesterday on a 10 or 15-minute chart, most people would say, hey, this is a doji type day, right? Pretty much unchanged all the way across. Like NQ was 37 points, I think, from the previous day close to where it ended up yesterday. And then if you look at today and you look at a 10 or 15-minute chart, you're actually going to see that we're basically, we had some ups and downs, some daily intraday rotations, but we still have, in general, price action, making lower highs throughout the day. And if you add a couple other points of confluence, you start practicing with some things like moving averages, Fibonacci's, maybe looking at the overnight high low close from the previous day through the European time frame, and start plotting that stuff on your chart. You'll start to see patterns of the direction of the flow. So I would just say to Rob, maybe you need to add just a couple more things in there. I know a lot of people want to keep it simple, and I think simpler is better too. But sometimes you do need to have some other things on there just to help you get that picture. And then, specifically to my chart here with the icebergs, this is from just spending a lot of time looking at Bookmap and looking at the ice action. And you can see from all my posts that I spend a lot of time documenting the icebergs. I do it over and over and over, almost every single day. If there's an iceberg on a chart, a surfer iceberg particularly, I will document it and I will show it to people. And so for me, something that I have just noticed is that the icebergs tend to come out and provide either kind of some support or resistance. So if you look at the left-hand side of that screen, right, where it first came out at about the 8 o'clock Pacific Standard time frame, because that's a Pacific Standard time frame chart, you can see that that the price came down as it started to bounce up. A particular iceberg surfer started floating all the way across the screen, and as soon as the iceberg came out, price started moving up. And you could see it did a mean reversion back to go test the POC, which is the pink line. Then it made its way back up to VWAP, which is the white line. And so if you're doing any of Tom B's or anybody else's trades that are out here about mean reversion, you can use the liquidity zones, you can use the icebergs, you can use market pulse VPI to all help you find trade locations. And so I use a confluence of all that, right? I use market pulse VPI pretty significantly. I use icebergs pretty significantly. And I'm always aware, particularly, that when icebergs pop out, they'll act as, initial support or resistance. But at some point in time in the day, they're going to get retested. And you can see from that screen that we went up and we retested the POC, VWAP. We went up even higher. And then we came back and we finally ended up breaking down below POC again. And guess what we came and did? We came and retested the iceberg. Now, two things happen at a retest of an iceberg. We either break through or we bounce off of it. And a lot of that is helped in identifying it with liquidity zones and market pulse VPI for myself and my trades. So when I come down to see this retest of the iceberg here, I'll look to see if it's at a liquidity zone. or any other points of confluence, whether it's a Fibonacci, a moving average. But I will look specifically at the VPI there. And if you look at VPI, we have a spike down there at the test on the right-hand side where the balance of the iceberg occurs. So we do have sell stops right down into that iceberg, a little bit over at 11 o'clock. I mean, we get a retest there too. You're right. I was just happening to look at my comment was specifically to the right side at 11 o'clock. But on either one of those, you're getting market pulls VPI, you're getting sell stops, and you're getting reactions off of the iceberg. And so sometimes, people will say, hey, a trend line will usually get bounced 2 or 3 times, right? And then maybe you'll get a break. Icebergs can be the same way. So you actually see one test over there at about the 8:30 time frame. You see another test there in the middle where Bruce was originally drawing, which is about the 9:45 time. And now we're getting a third test over there at the right at the 11 o'clock time frame. And so you can just kind of see where we bounced off of those each time. And the third time is just like that, charm, and it bounced up pretty significantly. And I just took a quick 10, 15 point scalp right off of that. Now, if you're using 3 micros, again, a lot of people don't like to trade like this, right? So if it's not your style, don't do it. But for me, I have no problem doing 3 to 6 micros and just doing a buy order right there when I see it bounce right off that to see if it's going to give me a quick 20-point reaction. And if it breaks through, I have a pretty significant stop. So I probably put my stop down below one of those lower liquidity zones that you'll see down there around the 55 area, maybe 60 area, and just kind of monitor it. If I leg in on 3 micros, it's not going to kill me to take a little bit of a stop. Maybe I'll end up legging in if it comes down and does a peekaboo below and goes back up. But the main point of this chart was to highlight how icebergs can act as support and resistance. I personally can take trades off of them as soon as they develop, and I look for a reaction one way or the other off of them as well, just like a liquidity zone. So that's the point of this chart.
Okay, excellent. And then this one here.
And then this one's on the NQ as well. This is around 11 o'clock in Pacific Standard Time. You can see that we had multiple liquidity zones, which are highlighted by the yellow section. We have an iceberg surfer that has been swinging across for quite a while. So I monitor price, right? I'm looking for pullbacks. I'm looking to see a reaction at liquidity zones, and I'm looking to see reactions at iceberg. And here, the point of this chart is that I have both an iceberg, a surfer iceberg, is what I like to call them, surfing across the screen. And it is very close in proximity to the thicker liquidity zone that we see down there. And so one of my favorite trades, right, is to use market pulse with VPI coming into a liquidity zone. I'm looking for sell sweeps into sell stops. I'm looking for a flush of red sell volume and then followed up with some buy volume. And in this case, I don't take the first VPI spike that you see at 11 o'clock because we can see that the iceberg is actually below the price at that VPI spike at 11 o'clock on the chart. So now I am waiting for the thicker liquidity zone down closer to the iceberg. And you can see that we have the large flush of volume right there, right above the iceberg and the 71 stop indication there, the red dot. And we come down, we bounce one more time right into the liquidity zone. And then we have buy volume right after that with a reaction off of the iceberg and the liquidity zone. And you could just take that, if you take that little spike there on the VPI, it's not red at the time, but you can see, I pointed this out multiple times, that sometimes you get the initial flush and the lower VPI spike to the left side of the chart. And you look for the next one, which is a divergence. It's a slightly higher, the bottom of the peak is slightly higher than the left side. So it's almost kind of like a right-sided pivot rule, if you want to think about it like that, but you get a divergence between the left-hand VPI spike and the right VPI spike at that base of liquidity and the iceberg. So for me, I'm willing to go ahead and that meets my criteria of a sell sweep or a volume push down into a liquidity zone right at the iceberg. And I just sniped that thing for about 15, 20 points. And you can see it goes right back up, mean reversion to the POC. If I remember correctly, we actually ended up going much higher, and it ended up going up to VWAP as well. So multiple ways to get in. You can leg in on this one. You can let it have its impulse move, which is where I took off my first profit. You can let it come back and retest the VPOC. Once it breaks out above the VPOC and starts heading towards the liquidity up north, then you could do your entry there, or you could add there. So if you're not comfortable taking that trade as it comes down into a thick liquidity zone at that iceberg, then wait till you get that mean reversion up to the VPOC. It tests it, and then it breaks above it, and we start going up towards other liquidity zones and the VWAP above.
Yeah, beautiful, beautiful. Yeah, thanks, Crash. I mean, you can see this is starting to potentially turn into. I mean, I don't know what happened. I wasn't looking at the NASDAQ, but potentially this turns into a reversal. So you got like a break, a structure break here. Here's your impulse move, potentially your pullback, and then looking for your next impulse move.
Exactly.
So potentially, these can be tricky, and that we'll be talking about more about reversion or reversals in the near future. So
yeah, and again, it's not for everybody, but trade small, leg in, and then what I would say is, if you want to practice this, go into Sim, right? Get some hours on Sim, getting your eyes gauged, and being able to identify this kind of stuff so that you feel comfortable once you go live. But just do this in Sim. Start monitoring these icebergs. Start monitoring the bounces into the liquidity zones with the VPI spikes. You can see we have that CVD is down there basing right at the peak of the bottom down there with a VPI spike bouncing off of liquidity zones. You have the divergence. I mean, it's a perfect example. It really is not. It's not hard. I know it takes a while for people to want to buy at bottom or whatever, but this is a pullback, right? You got a liquidity zone and an iceberg that had just been tested right there. You got the divergence in the VPI spikes. You got thick liquidity, and you get a nice little bounce. So just practice it, I would say. Get your eyes used to looking at some other stuff, because you can get in and be in. You know, I've showed this before. 10, 15, 20, 30 points before you might otherwise have gotten in later on.
Yeah, a comment on that though, Crash, and this is like you've said this just about every single time, and I think it's really important. You are willing to risk a couple of micros at that area and catch it.
That's right.
And so you already have assessed the risk. You're managing the risk. I would imagine, like, when those don't work out, you said you take your stop, you look for the next one. Maybe when you first started with this, you had lots of stop outs, and then you started to refine it. You got to a point where you know what you're looking for with all of these confluences, and you noticed you had higher probability by taking them at that point. So I just want to mention, like, the other side of that is, because we all want to catch the bottoms and the tops, but like you have a risk management process in place.
Yeah, well, I mean, again, look at it on Sim. So just real quick, if you look at what's the next lower liquidity zone under the 60 there? It's about 57, right?
Yeah.
You're doing 3 micros. You just put your stop right there at 57, right below that next liquidity zone. So, I mean, on the NQ, that's a 3-point stop. How tight do you want it to be? I mean, that's pretty significant. That's a nice tight risk management stop right there. So you're just 3 to 6 micros. You're not risking very much on a 3-point stop. But I guarantee you, if you start looking at it the way I'm looking at it, you just put your stops down there below that liquidity zone. That's right there. You are just not risking that much.
Yeah.
And you get the iceberg surfer there. So that's just trust me. Start looking at these setups with the icebergs and the liquidity zones.
Excellent. All right. Thanks, Crash.
Yep.
Let's see. I've got I think a couple more, and these are coaches. And I know, I think Stan's in here. So Stan, if you want to comment in here. But we covered this in one of the webinars because you were asking about, well, or we talked about how the liquidity looks different in the currencies, the futures currencies, and especially the 6J. You get these striations, every point or so in here. But you're still, notice how, like, Stan is looking at the same exact stuff, right? And he knows what he's looking for. Beautiful right in here about this kind of skew in the order book, even with a really hard to read heat map in here. Yet, you can see his entry in here and his exit up here. So, and just going through, understanding first leg, conviction in here, exhaustion in here. And then adding liquidity on the bid, he's feeling probably pretty good in here. In fact, I would imagine pretty soon, Stan, you might even be adding some more in or something like that. But I don't know if you have
Yeah,
any
I should.
welcome, Stan.
Yeah, welcome. No, but nothing special to add over there. No, that was a nice one. It was maybe a bit of FOMO. I was waiting, so yeah, just for a flag pattern over there, and try to enter when biased with conviction. Yeah, but I should wait for
You were looking
the
for
break of the
this.
structure. Yeah, exactly.
Yeah.
Stop just under the structure as I do every time. And I was looking for a PC for market pulse with this, and I think it can really bring something like for the strength of a trend.
Yeah.
Like we can really see like the PC is showing like very green, and with the shift.
Yeah. In fact, this is something that I wanted to mention. Like, this is very different, and we'd mentioned it before about Market Pulse. In this case, Stan, you're using Market Pulse to exit. Kind of. You're waiting for an extreme reading, not to enter, but you're looking for that extreme reading, kind of in the trend, and when you get that, then you can consider your exit. And then when you don't, when you have like kind of shallower pullbacks in here in Market Pulse, that can be your entry, as long as you're in a trend. You got to be in a trend.
Yeah, exactly.
So, anything else, Stan, that you wanted to cover about these currencies?
No, this one. No. That's it was a good one. I'm pretty happy with it.
Yeah. It looks picture perfect.
I'm doing always the same. So yeah, I had like the liquidity, the order flow pattern that I'm looking for, and that was a good one for me. Like I could maybe scale front of liquidity, or add another one and leave a runner. Yeah, depends my risk management at this time, but yeah.
All right.
It was a good one.
Yeah, excellent. Well, thank you, Stan. That's the only one I have for you.
Okay.
But let's move on. And
no, that's great.
I wanted to end here with slowdown, and I mean, he's becoming like a minimal artist in here, as you guys can see. Like, he knows exactly what he's looking for. Now, here's his spring trade example, a long example in a diagram form, and then here it is here. Okay, what he's looking for, and it's beautiful stuff. And his target here, high liquidity, boom, and nails it. Now, what he was covering in here, though, because we've seen him do this many times over, is the NASDAQ. Okay, well, check out the NASDAQ here. Okay, on crashes, look at the liquidity in here. Okay, so this this Trader Map Pro here, I've got the other one here as well. Yeah, you can see like how the market is basically staying away here, and these kind of like stacker algos in here. and then when they're ready to trade, they'll stay in the book and not kind of like stay away by a certain amount of points, and they'll get filled. That's when we want to pay attention to that kind of liquidity. But it can be kind of distracting in here. So look at what Trader Map Pro. This is the NQ. You can filter out that short, high liquidity. You can see it's still kind of in here. You can see it a little bit in here if you guys can see this kind of shadowy effect in here, but it's a lot more muted. Okay, the high liquidity is standing out, and this helped him. Okay, so this Trader Map Pro tool is something to look into if you guys want more clarity out of your heat map. Okay, it's really simple to do. I can demo it for you tomorrow if you want to come to the webinar at 10 a.m. East Coast time. Okay, he's also got his market pulls down here. He knows exactly what he's looking for in terms of volume starting to pick up on that buy side, and he knows exactly where he wants to target with that high liquidity up in here. Okay, beautiful stuff, and very nice example of this Trader Map Pro tool as well. All right, so let's see. Guys, that's it. I want to thank you all for participating in the 2023 here, moving into 2024. We do have this. We have this offer for you if you want to take advantage of it. It is. We'll put the link into the chat for you here, and you can get 30% off the Bookmap Annual. But the deal here with the Academy is this: that you will get that deal. You'll be a part of the Bookmap Junior Academy if you qualify and make it and graduate into the Bookmap Academy and get Bookmap for free. We will prorate the rest of your annual subscription. Okay, so it's like a win-win. Get the deal now. Get really good. Get coached in the Academy. Get some mentorship, and then if you make it, you'll get the money back, and you can use it for add-ons. All right, so it's a great deal. It's only through Bookmap Academy. You will not find it anywhere else. All right, so and it's only for you guys as members or anyone who is joining as an applicant. All right, that's all I have for you guys. So I just wanted to say thank you, everybody. Thank you all, coaches, Jack, Stan, Slow Down, also Crash for a tremendous amount of great content, and you can see him on the fast track working his way through the Bookmap Academy program. All right, so thanks everybody. Have a happy new year. Stay safe, and we'll see you in 2024. Okay, thanks everybody. Bye bye.